All right, let's jump right in. If you thought 2025 was all about that narrow, tech-driven rally, well, get ready because 2026 is turning out to be a whole different ballgame. We're seeing a massive shift in the financial markets, and it's moving way beyond just one single focus. So let's break it all down.
Okay, so here's the game plan for today. We're going to start with what I'm calling the Great AI Reevaluation. Basically, the market's getting a serious reality check. That's leading directly to our next topic, a huge rotation of money into the real economy. All this uncertainty, it's fueling a record-breaking surge in precious metals. Then, for a little bit of whiplash, we'll look at Bitcoin's absolutely wild week. And finally, we'll pull back and look at the big picture, how politics and policy are becoming the unseen hand shaping everything.
All right, first up, let's talk about the elephant in the room from last year, AI. It was the story, right? But things have changed. Here in early 2026, the whole narrative has just flipped. The market's starting to ask some really tough questions.
And this quote from StoneX just hits the nail on the head. It perfectly captures the new vibe on Wall Street. The days of just slapping AI on something and watching the stock price go to the moon, yeah, those are over. Investors are now saying, show me the money. They want a real, clear path from all this hype to actual, sustainable earnings.
And look, this isn't just talk or a change in mood. We're talking about a massive financial impact. This number right here, it says it all. $240 billion. That's how much value was wiped off of Amazon's stock, just like that, after the company announced a huge spending spree on AI infrastructure. You can feel the nervousness from investors, right? They're looking at these absolutely eye-watering sums of money being poured into AI and asking, okay, but when are we going to see the profit?
And hey, this wasn't just an Amazon story. Oh no, this skepticism is spreading like wildfire. Just look at this. The entire S&P 500 software index was in the red in early February. We're talking about the bellwethers, the giants like Microsoft, Oracle, Salesforce. All of them fell by double digits. So that market-wide faith in AI, it's not just being questioned anymore. It's being actively and painfully repriced.
So the big question is, if all this money is getting skittish about big tech, where is it flowing? And that, my friends, brings us right to our next major theme, this powerful rotation into what people are calling the real economy.
What we're witnessing here is a classic market rotation, plain and simple. The capital is moving. It's shifting away from the Magnificent Seven, the huge tech stocks that basically were the market last year. And it's flowing into these value sectors, stuff that's tied to the physical world. Think industrials, think energy.
And you don't have to take my word for it. The numbers on this chart, well, they tell the whole story. Just look at the year-to-date returns here. Energy is up over 17%. Industrials, more than 8%. And then, look at information technology, last year's hero. It's down almost 7%. This is a complete 180-degree reversal from what we saw in 2025.
And this isn't just an American story either. This rotation is going global. It was a kind of under-the-radar story last year, but a lot of international markets actually quietly outperformed the US. So now you've got investors looking seriously at places like Europe and Japan, which seem to offer promising growth without all that reliance on AI hype.
So, okay, you've got all this rotation, all this uncertainty in the stock market. It's really no surprise that investors are running towards traditional safe havens. And boy, has that led to some absolutely historic, mind-blowing moves in precious metals.
Look at this. Gold has not just gone up, it has smashed through the huge psychological barrier of $5,000 an ounce. We're talking new all-time highs here. This is reshaping the entire commodity landscape as we speak.
So you got to ask, what's driving this? What's behind this historic rally? Well, it's not just speculation. It's really a perfect storm of three powerful forces. First, you've got central banks around the world buying gold like there's no tomorrow to get away from the dollar. Second, geopolitical risk is just ratcheting up, pushing people to safety. And third, everyone's expecting the Fed to start cutting rates, which makes an asset like gold, which doesn't pay a yield, look a whole lot more attractive.
But hold on, as powerful as gold's move has been, silver's story might be even more dramatic. It's really a tale of two different demands. On one hand, it's a safe haven asset like gold, but on the other, it's an absolutely essential industrial metal.
And this chart really shows you why silver is such a different animal. Unlike gold, a whopping 60% of all silver demand comes from industry. And that right there is where a massive, structural shortage is starting to really bite.
See, here's the thing. Silver is absolutely critical for Well, for everything that's the future. AI data centers, solar panels, EVs, they all need it. So demand is just exploding. But the supply for mines, it just can't keep up. We've had a supply deficit for 8 years in a row now. It's creating a fundamental squeeze on the entire market. Okay, so from physical metals, let's pivot to the digital world. While gold and silver were hitting record highs on that flight to safety, Bitcoin? Well, let's just say Bitcoin had a very different kind of week.
It was an absolutely brutal week. We're talking one of the steepest weekly drops for Bitcoin since 2022. In a single day, it had its biggest drop on record, wiping out $200 billion in value. Volatility is back, and it's back with a vengeance.
And this wasn't happening in a vacuum, right? If you look at this chart, you can see that volatility has spiked across the entire currency market in early 2026. And when things are that unstable, it makes a high-risk, speculative asset like Bitcoin even more of a wild ride.
Okay, for our last theme today, we've got to zoom all the way out. Because underneath all these moves in tech, in commodities, in crypto, there is a much bigger force at play. And that is the growing and frankly unpredictable influence of politics on the financial world.
And to really get what's going on, we need to talk about a concept called intervention risk. So what is it? It's the risk that markets start moving not based on economic fundamentals, but because of what governments do, or even just what people think they might do.
And this isn't just some academic theory anymore. In 2026, the market is moving less on earnings reports and more on headlines. Geopolitical shocks, threats from governments to weaken their currency, questions about the independence of the Federal Reserve, these are the new market movers, and they are completely rewriting the rules of the game for investors.
And what this all boils down to is that politics is starting to trump traditional economics. I mean, the dollar fell sharply recently, and it wasn't because of bad economic data. It was because the market was frantically trying to price in a whole new set of political risks, and that creates a much more uncertain, headline-driven world for all of us.
So that leaves us with the big $64,000 question. We're seeing this huge reevaluation of AI, this big rotation into value, historic moves in commodities, and politics is suddenly front and center. So, is this just a temporary rotation, a shuffle of the deck, or are we watching the very foundations of the market get rebuilt for a completely new era? I think that is the question for 2026.